that there is going to be a scheme now where if you have a home loan, you can actually approach your bank to defer your home loan payments. But, I'm sure this comes with a cost. And to take us through all the questions that we have in regard to this situation, we are joined by Paul Ho, who is founder and CEO of iCompareLoan.com. Paul, thank you for making time for us.
Good morning, Susan and Ryan.
Good morning, Paul. Hope you had a great week.
Yes, I did.
Yeah, and working from home hasn't been too much of a strain.
No, it's actually quite fun.
It is. Oh, cool. All right. Actually, I find myself a little bit more productive at home because I don't have people to talk to. So I get a lot more work done, actually. Okay. In light of COVID-19, we're actually seeing a lot of changes made, a lot of, new schemes that have been coming up. And Ryan, decided that we should talk about this one particular scheme that is very important. Ryan.
So yes, we do now have this option to defer our home loan payments right up until 31st December. And from what we've been told, we don't actually even need to go out and show documentation and so forth that we're affected by COVID-19. If that's our situation, we can go out to the bank and apply. Now the question is, Paul, what is the cost of this deferment? During this deferment period, is interest still being charged on the home loans?
Yeah, and actually explain the scheme to us for those of us who are not very sure what it really entails.
Okay, I'll just explain in brief. MAS has issued notice on the 31st March to allow homeowners to defer their home loans repayment or their interest repayment until the 31st December 2020. This is in view of people or homeowners who may be struggling to cope with the COVID-19 pandemic.
Right, so that's the scheme. Okay.
That's right. Just so coming back to the question, will interest still be charged on your home loans during this period of deferment? Yes, interest will still be charged on your home loan during this deferment.
Now, there are a number of, there are two options I've been told that we have. One of these options is to skip paying the principal portion of our home loan. What exactly does that mean, Paul? How does that affect the repayment?
Okay, if there are two options. One option is to skip the principal repayment and pay the interest only. So your principal remains the same and deferred till the 31st December.
So you pay interest, so you pay interest only every month?
That's right.
And you defer the principal every month?
That's right. So, for example, if you have a $1 million outstanding loan for 20 years tenure, that works out to be around $4,700, for instance, monthly repayment. And the interest cost is around $1,200 thereabouts. So, as opposed to paying $4,700, you will be paying $1,200. All right, so that gives you a lot more freed up cash flow to meet your urgent demands during this pandemic.
Right.
So that's the interest only. Yeah.
And the other option is to defer the home loan repayment entirely, I've been told. How does that affect the interest? Can you give us an example of the cost? To defer completely? If
you defer it completely, that means the interest will continue to accrue on the loan itself. So, for example, if you are paying $1,200 of interest a month and you defer for 8 months, then the $1,200 will accrue for 8 months. But there will be no interest on interest payment or charge on the interest. So the interest will be just charged on the interest on a single amount times the multiple number of months. And then at the end of the 31st December, that amount gets added into the principal amount and then it amortizes over the remaining loan tenor.
Does that mean that you end up paying more or do you end up paying the same if you didn't defer?
Actually, you end up paying more interest because you're borrowing longer period. You're deferring your interest payment. So definitely the interest cost paid will be more over the period.
Okay, so that is a consideration, isn't it?
Well, not really. I think it's actually quite good for people who needs it because what happens is that the interest cost will be marginal. Probably it be a few $1,000s over the cost of the entire loan. If you consider the build-up of the over the period of time, but people do refinance halfway, so it's really hard to actually calculate the total impact.
Right, but I think this seems like quite a small amount to pay if you consider that. It's going to be spread out over the next 10, 15 years when you start paying normally. But Paul, is there a difference between HDB loans and private bank loans with regard to this? Do we have deferment for HDB loans?
The correct answer is I don't know.
Mm-hmm.
Right. The reason is because we do not normally handle the HDB loan on the issue on the HDB property. I last checked on HDB press releases. There between 25th and today or yesterday, there was no release pertaining to this announcement on the deferment on HDB issued HDB loan.
Are we right to then say that what we're talking about today refers only to private bank loans?
Yes, what we're talking today only refers to private bank loans for private property as well as for HDB property.
Okay, so let's be clear on this. It's a private bank loan for HDB and for private property, but this does not refer to HDB loans that you might have taken for your HDB property.
Yes, I've read through the entire announcement. There's no mention of HDB loan. Okay,
so there is a difference, and I'd like our listeners to actually know that. So HDB loans and private bank loans are actually two separate things, and what we're referring to today is actually the private bank loans. There is some added cost, although it would be amortized over your 10, 15-year loan deferment, loan period. But is it worth deferring the loan? Part of your answer was yes, for people who need help, especially now during the COVID-19 pandemic. There will be people who would have reduced work, who may not be earning perhaps as much, maybe commission as they used to, and they could have shorter work hours and things like that. Who then should be considering this, deferring the home loan?
I think people who has ample cash flow should not consider deferring. And for those people who are already struggling, and if they still can scrape through, I would recommend them not to defer, because MES has stated that deferment scheme, when they opted out, should not be considered as a default. It will not be recorded as a restructuring or a default.
Right.
But what MES did not say was, would they be recorded in the credit record as deferred payment, and thereby leading to a potential future credit standing impairment?
Right. So it could impact your credit score.
This as people who will take the scheme on lesser merit or lesser credit merit.
Okay. Right. And Paul, when you do get a response to that and you know the answer, please get in touch with Ryan and me, and then, we'll have you on again to have a chat with us on this and to clarify your question to MAS. How about that?
Thank you so much. Yeah, we will let Ryan know.
Yeah, brilliant. Paul. Yeah, thank you actually for clarifying this. Actually, I was a little bit unsure about this scheme myself. So thank you very much for the clarification. And that's Paul Ho that we've been talking with. Paul, thank you very much for your time today.
Thank you, Paul.
Thank you so much.
Thank you.
Thank you, Ryan.
Paul Ho is founder and CEO of iCompareLoan.com. We've tagged him in our Facebook post, and you can read more about him, his company, and also, maybe ask questions of him outside of Open House. You can also read more about the articles that have been written up by